In the currency quadrant, looking at the euro, we got our first settlement in the cash market, not in the futures market, but in the cash market below 110 since testing key resistance at about 111.50. We got down there, or up there rather, about September 11th, came off since then, and ever since we've been falling, and we fell pretty dramatically in the euro futures today, getting down to about 110.03 and a half on the low side of things, and then settling right around 110 in the future side. Again, the volume wasn't that great, but it was an exacerbated move coming down almost 2/3 of 1%. Trade tensions specifically between the U.S. and the EU was part of the problem. The U.S. released a list of about $8 billion in U.S. products they could, or I'm sorry, in EU products coming to the EU they could theoretically put tariffs on. That kind of added to some of the tension that we're seeing between the EU and the U.S. In terms of other issues, some members of the EU met with the Iranian president at the UN this week, and the U.S. didn't really like that, and the market seemed to take it as an overall sort of chilling of trade talks between the U.S. and the EU. And again, that EU weakness could certainly be exacerbated, the economic weakness we've seen recently, if tensions between the U.S. and the EU were to accelerate from where they currently are. And then lastly, we had a pretty big dollar spike, the dollar going up almost as much as the euro fell, about 0.68%, so a little bit less than 0.75%. And the dovish Fed governor from Chicago, Chicago Fed President Charles Evans, spoke like a hawk today. He really said that the Fed was well positioned going forward, implying that they didn't need another rate cut. And that's unusual because Charles Evans has a reputation as being more dovish than some of the other Fed bankers, really one of the more dovish bankers that gets into the media when he speaks. So that was pretty negative for the euro because it was positive for the dollar overall.